we're going to deal with these adjustments. Ne? Can you see what they said, what they did? Ne? They only want adjustment. Yeah, okay, we're going to do all the adjustment. Ne? Okay. So I'm going to start with the first adjustment. Just do this so that I can have the structure. So the first adjustment, let's read and check. They say, I'm going to read the first one, you can read the next one. Okay. Year-end adjustments and additional information. According to the physical stock taking, the trading inventory on hand on the 31st of December amounted to 56,300. Okay? Now, this is after counting like physically. We found that the stock is how much? 56,300. We need to go back to the question, to the trial balance, and check if we've got any stock. And check if that stock is at the end or at the beginning. Do you have any trading stock, trading inventory?
Yes.
Is it at the beginning or at the end?
At the beginning.
So, because the stock from the trial balance is at the beginning and the stock taking is at the end, we cannot compare the two. Oh. We just have to ignore that.
Okay, we ignore this one.
Yes. But if, let's say, this trading stock didn't have a date on the 1st of January, it was on the 31st of December, we were supposed to compare the two and check if we have got shortage or not.
Oh, okay.
Does that make sense?
Yes.
And if we've got a shortage was supposed to be the difference between the trading inventory from the list and the one from the stock take.
Okay.
That shortage, we have two accounts as, the two accounts were supposed to be cost of sales and trading inventory. We used to call that a trading stock deficit. Okay. So the trading stock deficit will affect what? Cost of sales. Of which it will increase cost of sales and decrease. Because the stock went down because of the shortage.
Okay.
So obviously, this will be what?
Yeah.
This will be? Is what we're supposed to put here. I don't know if you want me just to put it for the sake. Do you understand what I said?
I understand.
Okay, no problem. But I can't compare the two because the other one is at the beginning, the other one is at the end. If they were both on at the end of the period, I would compare, and that shortage will be recorded as an adjustment, the difference between the two. So I'm going to ignore number one, I'm going to go to number two. Because there's nothing to adjust there. The depreciation, I forgot that you must read it, okay?
Okay. Depreciation on vehicles is written off annual at 15% according to the straight line method. On vehicles, 15% on to the straight line.
Okay.
It's written off.
So, what are the two accounts involved?
Vehicle.
We are depreciating. The first account is going to be?
Depreciation.
And the other account?
Vehicle. Accumulated.
Depreciation. Is it the vehicle?
Yes, vehicles. Vehicle.
Can you see now? So when you depreciate for the year, remember it's that box that I've drawn, you know, yes, that box. Yes. But here there's no need for me to have that box because I don't have the sold one. I don't have the new one. It's only the one, this one. So I can just calculate on this one. Yeah. So how much was the cost? Go and find the cost for this.
Cost, price of the vehicle.
The balance?
150,000.
Yes. We're using which method of depreciation?
Straight line.
Times?
15%.
How many months obviously?
12
over 12.
That's 67,500.
So I must come and put it there.
Yes.
So which account to debit? Between the two accounts.
Which do you choose?
Which we must debit either this or this. So I'm just asking which account to debit. Okay, let's decide. What is this to us?
Expense.
Expense. Increase or decrease?
It's decreasing. It's increasing. Expenses are going up.
And which side?
CI. Wait. It's LIC. X. Is that? It's going up. It's DI.
Obviously this one?
CI.
Because that one must be the opposite.
So it's always start with the debit side.
Yes.
That one, which is depreciation.
Yes.
It's 67, 500, and then it's 101. Oh, what about the accumulated depreciation?
No.
That was on the first.
No, remember this is just an adjustment. We just want the depreciation for the year. So when we go to financial statements, we can add. Don't confuse the two.
Oh.
We only record the one for the year. Only for the year. Because we only want adjustment. The adjustment is only this one. The one that we just calculated, okay?
Yes.
So I'm going to ignore narrations because they can ask you for narrations, remember? You can just write depreciation for the year in brackets. So I'm not going to do that. I think you can cope with that.
Oh, the vehicle.
Yes.
For the vehicle.
Okay?
Yes.
No problem. Next one.
Telephone account for December 2016, so now that is bill outstanding.
The telephone number, the telephone amount for 31st of December for this month is still outstanding. What do you call expenses still outstanding? So, outstanding expenses mean they are due, they are in areas, they still to be paid, still to be accounted for, still to be provided. We call them accrued expenses. Are you okay?
Yes.
So as long as they say expense is still to be paid, still is due, outstanding, they mean one and the same thing. So it's what? So what are accrued expenses to us, according to the groups? Expense still to be paid. We are owing that expense. It's a liability. And the liabilities are?
They are
increasing.
And I see increasing.
Which side?
And I see increasing. So this thing was 2016 is the debit side, I think.
Liability.
Credit side.
Increase on the credit side.
So I see up on the debit, down on the debit, up on the credit. And then tax is okay.
So because this is a liability, I still have to pay for it. It's outstanding. That's why I say it's a liability. But it cannot go on its own. So when you say accrued expense, you must ask yourself, which expense are we talking about here? Go back and check. Telephone.
So that's the.
So obviously telephone expense will, let's check. Let's use our account equation skills. What is the telephone expense to us?
So also that. It's an asset.
Expense.
It's an expense. It's also
Increase or decrease?
Increase.
Increase. Now we come here.
We start with the debit side.
Start with the debit one.
Telephone expense.
And don't put them in line.
And account accrued expense.
How much is the outstanding?
Outstanding was 700.
Let's check it.
Or never put them straight. Never.
No. The one that goes to the credit side, go a little bit further. No? Now, the other one I'm going to erase here for more space. They say the investment was made on the 1st of January 2016. We made an investment here at the rate of 12% per annum. The interest of 6,000 for the last quarter is still
outstanding.
So in this one, they don't ask us to calculate anything. It's okay, they gave us the interest already. We have got the amount. But we need to come up with the two accounts. So the interest on investment is still outstanding. So give me one account that you can come up with.
They owe us.
They owe us, yes?
Okay. So an investment is an asset.
No, there is no investment there. What is this all about? Yes, we made an investment, but it's not investment that we're going to account. We're going to account for
interest
on
investment.
They are two different things. Don't say investment only.
Okay. Or interest on investment.
Yes.
And then what's the other?
Highlight that, it will give you the account. Highlight that thing where they said still outstanding.
Still outstanding.
Okay, I was talking about expenses now. I said expenses which were still outstanding. What did we call them? Accrued expenses.
Yes.
So what about the income still outstanding?
Accrued income.
Perfect. You see? Because I'm talking about an income, I'm going to call it accrued income. So look for these magic words. Due, outstanding, still to be paid, still to be, things like that. So the minute you see that, it's going to be accrued. It's either income or expense, depending on whether this is an income or expense. Okay, what is this to us?
This is an income.
Income. That's why I said accrued income. If this was an expense, accrued expense. Can you see that?
Yes.
So what do you think accrued income? How can it?
Increasing.
What is it to us? First.
Let's see. Income.
It's not an income. It's an asset. Because accrued expense is a liability.
Okay, got it. So still need to come to us. This is the most confusing.
Yes.
Investment. They owe us an income.
Yeah, if you owe me an income, that income is mine.
So increases on the credit side.
This one?
Yes.
What is this? Increase or decrease?
It also owe us increases on the debit side.
Perfect. It's an asset.
Yes.
Which one must I start with?
Accrued income.
He said it was how much? 6,000. That was number 4. Number 5.
Number 5 is advertising expenses for January 2017 has been prepaid.
Please just try to give me one account. If advertising expense has been prepaid, give me one account that you see, that you can easily see. Because some
Prepaid,
account
is it cash or what?
No. Yes, the money is cash, but we cannot put it as cash. Otherwise, you're going to use the money. So, what account can you easily see there on that statement? What account?
I think is expenses.
Which one? Be specific.
Advertising expenses.
That's the first account. They are talking about advertising expense. So they say advertising expense has been
prepaid.
Prepaid. What is the account? We've got an account already.
Bank. Is it bank? Prepaid.
Expense.
So just look at the weights and just.
Yes. So prepaid expense is an expense that has been paid in advance. So next time they want to say prepaid, they will say an expense has been paid in advance. Just know that it's a prepaid expense. When they say income has been received in advance, it's going to be prepaid income.
Paid in advance, received in advance.
So it depends whether you're talking about an income or expense.
Received in advance. Okay.
What is advertising to us?
Advertising expenses.
Expenses.
And then
What about the prepaid expenses?
we already received it.
We paid already. We paid it. We are the ones who were paying.
They need a liability.
No. If you paid something in advance, it's still your money.
So
Yes, you can even get it back if you want. So what
it's an asset.
It's an asset. Yes.
Alright.
Yes.
So advertising, we will pay them.
We pay them in advance, yes.
So it decreases our expenses.
Yes, I like that. Because obviously,
Credit side decrease on the credit side.
yes. And obviously this will
The increase
our assets on the
debit side.
always start with this one,
Okay.
It will give you the answer for that one. Because if I say prepaid expense is an asset, it means my assets are more now.
Yes.
And then I must put it on the debit side, and then I can put the opposite. Because sometimes you can make a mistake with this one. Because normally this one increase on the debit side. But I like the fact that you understood that the expenses are decreasing.
Yes.
Because obviously you pay them in.
Advance.
So obviously you cannot account for those months.
Yes.
Okay, so which one must I start with?
Prepaid. This was 500.
500. Thank you.
Number 6.
Yes.
With the whole day, the debtor has indicated that he is unable to pay the amount owing. His debt must be written off of 2,000.
Two accounts
Yeah.
when we write off a debtor, always.
So we're writing him off. Debtor's control.
Just control. But the fact that you are writing off, what do you call the written off? What is the account for writing off?
Yeah, you know this one. Yeah, say, tell me.
It's either you call it or you choose. The well-known one, start with this.
Bad. Is it bad? Bad debt.
What can you call it?
Credit losses.
So it's up to you.
Debt, credit losses. Everything that's written off.
Yes. As long as you write off a debtor. You write off a debtor, we say the other account is bad debt, okay? And then we can classify if you're ready to classify.
Debtor's control
Is our
asset is kind
okay. Increase or decrease when you cancel what he owes you.
with decreasing
And now we said
credit.
perfect. This one, what is it to us?
Bad debt to us is a liability or an expense.
No, you can't give me one. Can't be all.
Okay. Why if you look, it's an expense.
Perfect. Can't be a liability, you don't owe them.
Can't be a liability. We don't know that.
Increase, will my expenses increase or decrease?
They will increase.
Yes. Obviously, and we say
Savings are.
perfect. We start with
Bad debt.
thank you.
So this is an expense to us.
Yes. Because we won't receive this money anymore. We wrote off.
It's not a liability because we don't owe anyone. We're
Yes.
just losing it.
Yeah. I normally say to people, in accounting we don't cancel debtors because this thing is like cancelling. I normally say, we don't cancel debtors.
We just lose.
We write them off
Right.
in accounting.
We never cancel.
This is what I call levels. In accounting we've got levels, you know that?
Yes.
Yeah, so we write off. 7.
Allowance for credit losses must be adjusted to 1,000.
Yes.
So allowance.
So first you must understand what is the allowance for credit losses. Ne? Allowances for credit losses.
Yes. What is it?
Before we used to call it provision for bad debts. This means this is the money that we put aside for possible bad debts. Because obviously these people, if they don't pay us, you know that they affect how we run the business.
Yes.
So it's like we put money aside and say, should they disappear, we're going to use that money to replace.
Okay.
But it's a negative asset. Because we took money from the bank, we put it for negative things.
For negative. Okay. This is the money that we put aside in case
Yes.
we retain bad debts.
Can you see what they are saying there? They say we need to adjust. They say it must be adjusted. It means, if they say it needs to be adjusted, it means we have got the old one that we need to change.
Okay.
What is the balance? What is the old one? You go to the list of balances and tell me how much is the allowances currently. Because they can't just say adjust. It means something is existing.
It was 1,100.
1,000.
100.
This is what we need to do. This is from the balances. This is from the balances. The balance currently is 1001.
Oh, so now we are adjusting that 1001 into 1000.
They say we must adjust it to. Adjust to
1000.
1000. So meaning the adjustment, how much is the adjustment according to you?
It's 100.
We must adjust 1.1 with
100.
to become what?
1000.
So here in the GJ, we only need the adjustment.
So
We're going to record how much?
we minus 100. So it's 1001 minus 100.
1001 minus 1000, because we don't know this, we found it ourselves.
Or before we need to find 100.
The difference, that's the one that.
Difference.
Yes.
So it's 1001 minus 1000.
Yes.
It's 100.
Yes. So it must go to,
G.
but we need to decide whether this thing is an expense or income, this adjustment.
It's an income.
Because we,
Because we're getting it back.
that's true, my brother. It's an income because we are getting it back. In other words, we are reducing it. We're gonna put only how much aside?
1000.
We get 100 back.
We get 100.
So meaning we know that it's an income. Why must we know? Because the true account for this will always be allowances for credit loss. Some books use the bad debts, but for our book we use allowances for credit losses. Adjustment. Can you see now?
Oh, yeah, adjustment.
So some books are using bad debts instead, but it's still okay.
Okay.
Now, I need us to understand thoroughly here. The adjustment that I'm talking about is that one.
It's 100.
Is it? How can we classify it?
If we get it, it's an income.
It's an income, like we did there. It's an income.
Income increase on the credit side.
Increase on the
Credit.
you see already I know how to record.
Yes.
And obviously,
Credit side.
this is going to be on the
Credit.
because it has to, if you can check, this has to what?
Go down.
And it's a negative asset. Negative asset go down on the debit side. This is a negative asset, as I said.
Yeah, it's negative.
But because sometimes it's not easy to understand this one. Look at the adjustment. If it was an expense, it will go to the debit side. Can you see? That's the easiest way of knowing it. So I'm going to start with which one?
Credit losses. Allowance for credit losses.
Yeah, yes, you're right. And I'm going to put,
100.
it's the 100, né? And allowances for credit losses. Because I don't have a space, I'm just going to write it here. But please, you must have the word adjustment.
Okay.
Otherwise, it's going to be wrong. How much? 100.
100 loss.
Yes. So that's how we decide. So that is the GJ.
For adjustments.
Yes.